Shares of TCS slipped despite growth beating estimates in the second quarter. The company also announces $1 billion AI service foray and remains on the lookout for acquisitions. The management also tells CNBC-TV18 the company will inch towards a margin of 26%.
Tata Elxsi also slips despite a largely inline quarter where constant currency revenue grows after 2 straight quarters of decline. The Nifty IT index is also trading under pressure.
And Ixigo announces a fundraise where it will issue about 10% equity process to raise 1,295 crore rupees, with stake potentially rising to 16% via open market purchase. The proceeds will be used for growth, corporate purposes, and foray into agentic AI.
Flexible workspace operator WeWork India sees a muted debut, listing at 648 rupees a share versus an issue price of 650 rupees. The management will join in to discuss the post-listing strategy shortly.
And Sona BLW rallies after it signs a MOU with Germany's Neura Robotics to jointly develop humanoid robots. Lloyd's Engineering is also on the move following a MOU with a Fly Focus to develop UAVs for military use. Hello, good morning. You've tuned into Chartbusters, coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwala. Today with me is Vivek Iyer as well. Vivek, good morning and happy Friday. Surely a happy Friday coming in for the markets as well. At least we're managing to hold on to green. Second day of gain again for the markets as well. And broader end of the market, that's also managing to hold on to gains. So portfolios, I am sure, today are going to be at least on the green side. So not much of party there.
Good morning, Vinny. Like you mentioned, the Nifty has slipped a little bit from 25,300 levels. The Nifty Bank, however, is doing quite well, especially led by a sharp rally that we're seeing across the PSU banking index. And even a name like Yes Bank today is doing very well in the session. On the other hand, what's taken a bit of a knock in the trading session is actually the Nifty Metal Pack. So names like JSPL, Nalco, Hind Copper, Hind Zinc, all of these stocks under quite a bit of pressure today. Some gold finance companies too seeing a bit of a knock. Look at a Muthoot Fin. That particular stock has fallen to the day's lowest point. But moving on, Karan Veerwani, Managing Director and CEO of WeWork India, joins us. Remember, WeWork has just listed on the exchanges. Well, thank you so much, Karan, for joining us. Congratulations. It's a momentous occasion as far as WeWork is concerned. So congratulations to you and your team. Well, now that you are a listed entity, we can talk numbers and we can also talk guidance. FY26, give us a sense of what will occupancies look like, what is the top line target, and where do you see margins heading?
Good morning, firstly, and thank you for having us. And yes, we are very excited for finally being listed on the exchanges. You're getting straight into numbers. So I think that, we've really seen the entire industry sort of grow. We've been growing over the last few months. We feel very confident about the direction of the business. We're very excited to announce the Q2 numbers when we do in the next 1 month. In terms of guidance, what we've always been saying, we will grow at this 20 to 25% revenue growth. We are adding new centers on a daily, monthly basis. And we've seen velocity of sales grow almost 30% in the last 12 months, which will show itself in the monthly and quarterly numbers that we announce soon.
Okay, surely that growth, Karan, as you're mentioning, 20 to 25%. Firstly, good morning, Vinny, joining in the conversation as well. Last time when you spoke to CNBC-TV18, you'd spoken about margins for the industry are at 22%. Last year, you managed 21.6% as well, right? But Q1 FY26, it's come back to that 18% range. So in terms of EBITDA margins, what are we keeping an eye out on for FY26?
Yeah. I mean, just to be clear, the industry margins are actually 12 to 13%, not 22%.
Okay.
We are operating and we delivered almost 22% last year, which is double that of the industry. And even today at the last quarter at 18%, was still significantly higher, which was largely driven by capacity coming on and some occupancy ramp up, which has happened already in Q2. So you will see the next quarter numbers inch back closer to the FY25 numbers. And then we hope for some margin expansion further than that in the year as well.
Mm-hmm. Karan, just one point, because there are some investor concerns, that are raised as well on a couple of points. One, there's some civil cases, outstanding payables. Vinay Bansal, he's gotten some, there's gotten some SEBI into the picture as well. Could you help us understand in terms of this situation, or how do you wade off this investor concern that is there on these points?
I think that investor concern is now sort of addressed. We went through, a few court hearings just in the last week, and now the High Court has given us, has reserved for orders and given no interim relief to any of the complaints. I mean, I'll just tell you, and you can go into the documents, and anyone can, go through our through our entire documents. We've disclosed absolutely everything. We've done everything by the letter of the law. In fact, more than that. And really, investors should have no concerns. This has just been a very, focused effort to try to bring down the sentiment, which today you can see we are finally listed on the exchanges. We're very happy, very proud of that. And here, just to put our heads down and build for the future. And look, the numbers will speak for itself. That's all I will say. I won't say anything more than that.
Okay, Karan, we get that point completely. Just for some more further clarity, what are the outstanding payables that are due? Is any of the outstanding payables under dispute, and could that mar FY26 financials?
No, we don't have any such outstandings. We have a rolling way that we run our projects. As you know, we open buildings on a month-over-month basis, and so we use similar vendors across all of those. And right now, we have no concerns, nothing to do with outstandings. The business is growing well. Sales has been amazing. Revenue is growing faster than we thought. Bottom line is growing faster than we thought. The market is growing faster than we expected, and we feel like this year, the next 5 years, the next 10 years is the time for the flexible industry, and we are the leaders. We will continue to push on it. All of this is just noise created, and today is a positive, happy day, and we're very excited for the future.
Absolutely, Karan. A very happy day for you all as well, and we'll have you more often to talk about numbers. But a quick word in terms of expansion, Karan. Will Bangalore and Mumbai be the focus areas, or will you be expanding to other cities? And anything in terms of luxury property side or premium offerings where rentals could be higher than the existing ones? Is that in the pipeline?
Yeah. So, I think our rollout depends each year, and it sort of changes each year. While today our portfolio, largely is Bangalore and some part Mumbai. Mumbai, in terms of value, just gives us more from a revenue perspective, just because the rentals and the per seat cost is high. Bangalore, from a footprint standpoint, is the largest, but that's also because Bangalore continues to be the largest city in terms of commercial absorption. But over the course of the year, we've opened, buildings in Chennai, in Pune. We're going to be doing a lot of openings in Gurgaon soon, between Cyber City and Aero City in the next few months. We have some further expansion happening in Bangalore as well. The ones in Aero City and in Gurgaon are premium locations. They will be a slightly more elevated product, and we're excited to sort of bring that to the market.
Okay. Well, thank you so much, Karan, for joining us. We wish you and the team a very fruitful listed enterprise journey. With that, we'll now slip into a short break. On the other side, we'll be joined by the management of Canara HSBC Life Insurance to discuss the IPO that has opened today. Let's stay tuned. Welcome back to CNBC-TV18. You're watching Chartbusters. We have a very important and an interesting conversation lined up. Anuj Mathur, the Managing Director and Chief Executive Officer of Canada HSBC Life Insurance Company, joins in as the IPO opens today. Thank you so much, sir, for joining us and coming to our studio. First up, this particular IPO is completely offer for sale. There's no fresh issue. Whole host of insurance companies are actually looking to raise capital. So why are you not looking to raise capital? And we are seeing a private IPO come after a while in the insurance space.
Right. So very interesting question. See, we are a company. As a company, we have now 17 years of past performance. And if you look at our past performance as a business, we are very, very profitable. We are generating internal accruals, which are good enough to fund our various strategic initiatives. So the reason why we're not raising fresh capital is that we have sufficient solvency margin. We have sufficient margin in terms of cash flows, profitability. So that's where we don't think that we need capital as of now. So it's OFS, where the existing shareholders are diluting their shareholding partly.
Absolutely. So yes, right now we don't have a requirement in terms of the fund or to expand further. But one point I want to know, when you're looking at it in terms of numbers, around 86% of your premium comes from banks, Canada as well as HSBC. Now, is there a plan to further diversify into the distribution mix or, any new banks that you're looking to, sign up with? What is the strategy there? And what would be your ideal distribution mix that maybe you would look at?
Thanks, Vinny, for asking that question. So first of all, yes, you are right. We have Canada and HSBC as the major contributor. But let me also share that we have various regional rural banks. We have few other banks also through whom we distribute. We also have digital channel and few other alternate channels. Recently, we have also launched agency channel.
Okay.
So that should help us to further diversify and also add to the growth of the company. So bank insurance as a model is really good. You are able to kind of do business at relatively lesser cost, better outcome for the customer. So that's where we feel that bank insurance will be our focus area. But at the same time, we like to diversify. We like to have more banks, more channels. That's a growth path.
So 85% is only Canada and HSBC, right now? Or?
Broadly, yes. Broadly, yes. So 70% as of now is Canada. About 14 to 15% is HSBC. Then we have few other banks contributing to about another 6 to 7%.
And where would that contribution of other banks go in the next couple of years? Is there something that you all have in mind to increase it?
Yeah, it will increase. So we are actually making good investments. We are launching various initiatives. So we should see our business growing through other channels also, including banks.
So in the next couple of years, what would be the ideal mix when it comes to bank assurance from your own strong parentage and from the other agency channels?
So we feel that in the next 3 years, our alternate channels, which includes agency, we should be able to kind of grow that to about 15%.
Okay.
So currently it's about 8%. We should be able to double it up in next 3 years. That's the broad kind of strategy which we have.
That you're working on. Okay. So now when it comes to the product mix itself, ULIP actually contributes a significant share of your portfolio. That is slightly margin dilutive, when we speak to a whole host of analysts. So going forward, will that continue to be a strategy or would you look to improve margins?
Okay, so let me clarify. Traditionally, as a company, we have been more of traditional dominated company. And the reason for that is our customer profile, if I look at, we have customers from tier 2, tier 3, tier 4 cities where the customer ask is for guaranteed traditional products. So that has been our forte. Last year was an aberration because markets delivered very good returns. So we saw customers asking for more ULIPs. And we as a strategy, we believe in meeting the customer need, customer ask. So our ULIP contribution went up last year. But again, if you see the first 3 months of this fiscal, the numbers are...
That was a one-off last year.
Yeah,
what will be the ideal target for you?
The ideal mix would be, we feel that ULIP should be between 40 to 45%. Okay. There's a market for that. There are customers who have got the risk appetite based out of metro, urban locations. So about 40 to 45% would be ULIP and remaining 55% roughly about traditional business.
What about the VNB margins? Last reported 30th June numbers, which I'm seeing, 19.5% was the VNB margin. I know you can't talk outlook, that I'll ask you on the day of listing. But in terms of other private players, when you look at it, they're in the range of 25 to 29%. Would you aspire to go higher in terms of VNB margins, and by when would we expect such numbers?
So, Vinny, actually, the margin, VNB margin, also depends on the size of the business and how long you have been in the business. So we started our business in 2008, relatively younger company, 17 years of business. And as we kind of grow our business, and there the in-force book, the renewals also play a very important role. As the business is growing now, we are seeing decent growth. We have outperformed the industry in the last 3 years. So if I look at that, obviously the margins are going to increase because cost is more or less flattish. And we have that advantage of low cost because of our superior banker model. So going forward, our margin should increase. That's the trajectory which we have seen in the past also.
Okay, so you've told us that the reliance on bancassurance will reduce. You expect to see slightly better margins. And so last question, what will be the impact on your EV from the GST changes or the GST cut that is coming?
So first of all, I think this is a very good change which has happened for the industry. I think life insurance is one of the few businesses where there is GST exemption. So I'm really grateful to the government for giving us this relaxation, this benefit. So I look at the big picture. I think it's going to be a big advantage for the industry and for us. And there could be some temporary impact, but it's not going to be significant. It is going to be in line with what we have seen for the listed players also. So I don't think so there'll be a major dent out of it.
Okay, sir, thank you so much for coming in today. And good luck with your IPO as well.
Thank you.
We'll talk to you on the listing day as well.
Thanks.
Hope you come here again to talk
Thank you.
to us.
Yeah. Thanks for having me on the show.
Thank you so much, sir. Thank you. So that was, the management coming in for an IPO that has just opened up today. We have, Anuj Mathur, who spoke to us in terms of what is the expectation maybe that we could watch out for Canara HSBC Life Insurance IPO opening today. Keep an eye out on that. But on that note, we're going to sip into a very short break. Don't go anywhere. We'll come back with more market-specific action on the other side. Welcome back, and you're tuned into Chartbusters on CNBC-TV18. We have the markets that are trading in the green. The Nifty, is just slightly below 25,300. Keep an eye out on that if it comes back to that level. So we'll watch out for that. Mid and small cap, that's where we are seeing a good performance coming in. And bank is the one that is leading the way today, especially the PSU banks. But with that, we're absolutely out of time on this edition of Chartbusters. Thank you so much from Vivek, me, as well as the team who put this show together. Thank you so much for tuning in. Up next, you're trading up.